Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pokamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. And with that, that's the disclaimer. I'm going to share my screen. If you guys are joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, the analytics. If you have a question, you could type it into the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question live, click on that link to Zoom on that live chat. Once you log in, click raise your hand. We'll let you in. You could ask your question live, direct, show us what you're looking at. While to give you guys a chance, couple minutes to type in the questions, we're going to take a couple minutes taking a look at the pre-market report, see if we could get insights, what's going on in the pre-market hours, and then we'll move on to the questions. So pre-market report, these are stocks trading in the pre-market hours. I'm going to come here and we have a calendar view of what happened in pre-market hours, historically, and right now we're October 25th. So this is what's going on today from a high level. We see 268 stocks are trading up, whereas 287 stocks trading lower in the pre-market hours. As far as volume of shares, we have 93 million shares trading on up volume versus 44.5 million on down volume. And if we convert that volume to dollar value, there's $710 million worth of stocks trading higher versus $1.8 billion trading lower. So from that perspective, looks slightly bearish in the pre-market hours. Let's look at it from a couple more perspectives. We're going to scroll down, and we have these three lists. We have our most active stocks in the pre-market hours, biggest percentage gainers, biggest percentage decliners. You got 33 stocks that made our percentage gainers list. 50 made our biggest percentage decliners. And these are stocks that have to meet certain thresholds to make the list. So we have liquidity thresholds, price, volume. So from that perspective right now, also looks that we're leaning towards the bearish side of things, bearish sentiment in the pre-market hours. But if you look at the list, we do see that there are small cap stocks in there. We have ETFs, leverage products, closed-end funds. So to narrow down this list to a small group of stocks, we could use the filters here above. If you have a watch list, you could use your watch list to filter these three tables. We're going to use this one in ETF. I'm going to click on that filter, get different ETFs to select from. There are sector ETFs, broad-based ETFs. We're going to click on this one, SPY. That's the S&P 500 ETF. And when you do that, then the stocks below will get filter that are holdings. These are holdings in the SPY ETF, which are the S&P 500 constituents. And here we got 6 stocks that made our percentage gainers list, 16 that made our percentage decliners list. So that also indicates right now that the sentiment in the pre-market hours is bearish. So you could see we are getting a lot of stocks now reporting earnings. Here, Microsoft up top, up 5%. Here we got Google down 6%. I think a lot of it had to do with what, like the cloud. There was like a battle for
Yeah, their
cloud.
cloud numbers, it hadn't
One
grown.
was good. Yeah, one was good, one was not good. So they're giving a lot of weight to that. But we gave it a couple minutes, Will. If you have questions, I think I'll take them now.
Nothing's popped up in the Q&A. D.
Okay. Let's see. I had some questions. So one of the reports up here under stocks, we'll go over this. S&P 500 volume burst trade. So I'm going to click on this one. And this report here, it did have some questions on it. So we'll go over what this report is trying to show us. And when we look at the trades intraday, right, we have a lot of volume in stocks. When we look at the trades intraday, we have small trades, medium-sized trades, but sometimes we get these very large volume bursts. And they're large in the sense that there would be beyond, a retail investor or even a high net worth individual. It's not likely. These are large, have to be larger institutions that are coming in and quickly either taking liquidity off the book. Maybe it could be a very big block trade that traded in a dark pool, but it would have to be in a pretty big size. And we look at these large volume bursts and we calculate it because sometimes in certain stocks, could be bigger than other stocks. Okay, so we monitor the daily activity in each stock. We keep metrics based on time of day, what is, what would be considered a big trade here. And if these are, 3 standard deviations, even beyond that, a very big burst, an unusual burst. That happens very quickly. Okay, so these are looking at very quick bursts. It could be one trade, or it could be a trade that scoops the book. So you'll be, lots of trades, that is scooping the book, but it'll be in a very short period of time, within milliseconds. And then we take those trades, and then we determine was the trade that occurred, did it move the market higher or lower based on that trade, right? So we look at where were the previous trades, and this moved the market higher or lower, and then we determined that it was either buy burst or sell burst. Okay, we do that for all the stocks. We keep track of it, and this is a aggregate for S&P 500 stocks. Okay, so this is running for S&P 500 stocks, what's going on there. So you could see here, S&P 500, if that stock is in the S&P 500, it will make this list. And then you could see here, we keep track and showed in 5-minute intervals, right? So every 5 minutes, we'll update this. And then this is the cumulative line throughout the day. So here, let's say from 9:30 to 9:45, we could see that if we hover over it, there was $151 million worth of buy bursts versus $89.3 million worth of sell bursts. So on balance, there was $61.7 million worth of more buy than sell. All right, that's the buy imbalance. So it's an imbalance towards the buy side. And then we do that for next 5 minutes and next 5 minutes. And this line here is just cumulative throughout the day. So you could see how this line progressed throughout the day. And yesterday just kind of started, even though the market did go up, it looks like the buy burst themselves, remember, these are isolated trades, those showed more sell pressure. Okay. On balance, yesterday, $541 million worth of sell imbalance using this methodology. If we separated it, buy versus sell, you could see 54.7% of the dollar value was on the sell side, 45.3% on the buy side. And if we looked at the dark pool versus lit exchange, about 60% occurred in the dark pool, 40% in the lit exchange, which it indicates that there's still liquid, even with these big bursts, the markets were able to find that liquidity in the private exchanges, which is usually means that there's a pretty decent amount of liquidity, right? When you see more of the volume going to the public exchanges, lit exchanges, that means that they most likely could not find it in the dark pools, right? Because the first place they probably want to access it is in the dark pool. Because once you go to the lit exchange and you're hitting the limit order book, you're going to move the market, right? So the lit exchange, that's where you're going to move the market if you're taking the limit order book. So it's a decent amount still in a dark pool. There looks like that there's liquidity there. 60% of these large trades transacted in the dark pools. So that's kind of like the interpretation here. And this might not be a big number. Remember, there's always going to be some imbalance, right? It's never going to be zero, and it could fluctuate. So I'd have to go look, but 500 million may not be that significant from day to day. A lot of it came right at the end of the day over here. You can see here the last 15 minutes, $256 million imbalance to the sell side, which was already almost half of that, right? If we,
AD?
Yeah.
Chris is asking, do we break out what percent of dark pool was buying?
Not in this report. So
right.
not in this report. Okay.
Thing is, if it was buying, there would also be selling, right? An equal amount of selling.
So for every transaction, there's a buyer and a seller, right? There's always a buyer and a seller. But when we look at it, right, when we look at the, if the markets are moving higher, right? If at that moment they're moving higher, somebody had to lift those offers, right?
You would think, yeah.
There's buy interest and sell interest, right? So who's moving first, right? Is it the buyer or the seller? And if the markets are getting lifted, right? If the order book, if the limit orders on the book that are sitting there waiting to give, waiting to sell, if those are getting lifted, right, with big volume, then we're saying that was a buyer had to show up, right? Somebody had to, a buyer, there needs to be a buyer to lift markets higher. Okay, the sellers alone cannot make the market go up. You need buyers, right? And to make it go down, you need sellers, right? The buyers cannot make it go down. You could wish you could buy for a cheaper price, but somebody has to step down to sell it.
Yeah,
right?
there have to be more sellers than buyers, and buyers and sellers.
Exactly.
And market makers are the.
Right. So we have the transactions, right? We do have the transactions. There's a buyer and seller. But when we talk about the burst from the buy side or sell side, we're monitoring what are they doing, right? How did these transact? What did the prices do? If during this burst, if we're seeing that the limit order book is moving higher, right? If the limit order they're transacting and it's moving higher and higher, well, a buyer has to do that, right? A buyer has to step up to take, those limit orders, and the same thing to the downside. So that's how we're calculating the burst. We're monitoring the way it's transacting. Okay. So that's what we mean by buy burst, sell burst, right? Yes, every trade has a buyer and a seller, but we're just saying which is the burst to the buy side or sell side, right? Is it ticking up or down? Does that make sense?
Perfect.
Well, yep. All right. Because I do get that question, well, there's a buyer and seller. Yeah, but if think of it this way, you could put out your house for sale at a higher price, right? But you can't make your house go higher price until the buyer shows up and pays that higher price, right? You still need the buyer to come in and pay the higher price, pay that, and buy it. So think of it like that way.
Chris then asks, then can you determine the burst by volume? Is it on the lit or the dark? Is it in the lit market or the dark pool?
Right. So not in this report, it just consolidates all of them, right? So it's just looking at all of them, because some of these buy bursts, when they occur, you usually get also a mixture of, they'll go simultaneously, sometimes through the dark pool and a lit exchange, trying to grab the liquidity. So sometimes it could be, majority could be in the dark pool. Sometimes it could be in the lit exchange. But this report does not break it down, dark pool on its own. It just gives you a consolidated view. Okay. So to answer your question, not from this report.
All right.
So this is the cumulative of the S&P 500 stocks. So it's not looking at, SPY ETF. It's looking at the actual trading in the stocks that are components in the S&P 500. All right, that's what this report is. It's looking at the individual stocks. And here, it's the same thing. It's looking at the individual stocks and saying, okay, here's all the S&P 500. What if we looked within the sectors, right? Which sectors is this happening in? So you could see here, this is breaking down each sector. So consumer discretionary on balance had a negative $214 million of sell bursts. 16 stocks had on balance buy bursts, 21 sell bursts. So this breaks it down by sector, and then it gives you the number of stocks, right? So you could see it's not how many of these stocks had these bursts, right? So it's not just one. You could see how many were on the buy side versus sell side as well. Because even if you have a big number here, it could have been coming all from one stock, right? So it's even possible to have 10 buy imbalances and 8 sell imbalances, because if you have a sell imbalance in one stock, that's a lot, overwhelmed, right, in dollar terms. So we could see here consumer staples, energy. These are all the S&P 500 sectors. There were 2 sectors that on balance had buy bursts. So we had in healthcare. So healthcare had $129 million on balance positive, with 28 stocks on balance with buy bursts versus 16 sell. Here, industrials, here's an example. Even though there are more stocks that had sell bursts on balance than buy bursts, if we summed up the total dollar value on balance, $26.1 million more dollar value buy bursts. All right, so that's an example where these are reversed. And over here, what we have is just the individual stocks, the top 10 buying balances or sell. Okay, so that on the top 10 yesterday, we had SYK, ADM, GE, General Electric. I think they reported earnings, Amgen, JCI. These are the on balance, 83 million positive, 49 positive in ADM, $37 million worth in GE, and so forth. On the sell side, we had Tesla, the largest sell balance, $130 million worth. We had WELL, Amazon, MDT, MKC. So this just gives you a sense. If we keep going down, we could keep going down, breaking it down. And like you said, we could break it down by dark pool, lit exchange, and so forth. But this gives you a kind of top level estimation of what's going on with these particular type of trades, right? So what we're doing is categorizing the trades, and we're saying, take away all the other stuff, just give me those particular type of trades. And if we want to kind of track that, that's what's going on in the S&P 500 volume burst. So this is kind of our first report, because we are working on these buy bursts to get a lot more insights into single stocks, sectors, and so forth, and different ways to analyze it. But this is from the top level, kind of giving you guys an introduction to those types of trades that are going on. So that was a quick overview. I did get some questions on it, but the questions, again, they were general, just to kind of describe what's going on in this report.
That was awesome, D. We did have a question from Rob. He was asking about, I guess, Boeing had earnings this morning.
Yep.
And he was wondering maybe if you could look maybe at the stock price performance after earnings, or maybe how the straddle was showing before the earnings. But he wanted you to do a little analysis of the Boeing.
So here's Boeing. Let's take a look at this. So here, this was yesterday, right? So this was yesterday. The straddle, right, went out with an implied move of 4.9%, right? So that's the straddle. Right now in the pre-market's trading up 3.2%. So it looks to me from that perspective, it didn't move as much. We could see here that the options market overestimated the move 69% of the time. On average, the straddle predicted a 4.7 move in either direction. Yesterday was 4.9. And historically, on average, the move was 3.9%. So you could see there's about a 0.8% differential between the implied and realized move. So tended to overestimate it. Historically, it looks like. I'm not sure if there's a specific question. I mean, I could just go through, there's lots of things we could look at it. We could look at I think you said earnings moves, Will.
Yeah.
So this is how it tended to trade day of earnings. So on the opening, it tended to gap up more often than down. So 58% of the time it gapped higher, 42% lower, on average gained 0.5%. The average move at the open was plus or minus 2.5%. All right, so that's the average opening gap. So we're right here, 3.6%. The biggest move at the open was 5.5%, lowest 0.2. So we're inside that range, high low. After the open, this is how it tended to move. From the open to the high of the day, the average move was 1.5%. From the open to the low of the day, average move was down 4%. So it looks like the volatility to the downside tended to be greater than the upside after the open. Okay. The drift from the open to the close, we could see that 83% of the time after the stock opened, it tended to drift lower. Right. So the even though, yeah, we had, up moves, it tended to drift lower, not hold on to those gains historically. The next day, though, it did better, right? 83% of the time it was higher. So that's from a historical perspective, the distribution of returns in Bowen. So I don't know.
Cool. The one last question Rob had was, could you just show them the clicks, because we're almost up against the open, into the volume bursts, just how you got to the volume bursts?
Yeah, so this was for the S&P 500. So under stocks, the S&P 500 volume bursts, I clicked on here. Stocks, S&P 500.
All right. Hopefully that helps, Rob. D, great job as always. We're halfway through the week, everyone, in a busy earnings season. Thanks for joining. Great job, buddy.
All right. Thanks, everyone, for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, Chameleon.